Hi, hello, everybody. Welcome to today's podcast. My name is Adrian Boothie. I'm the head of trading here at Trend Signal. Today, we've got our How to Trade the Forex and Stock Markets podcast, and joined as ever with our chief analyst, Jerry Miller. Hi, Jerry. How are you?
Hello, hi. Yeah, not too bad. Cold, but surviving.
Yeah, weather's definitely changed since last
Mhm.
Tuesday, isn't it? It's definitely chilled down a little bit, but it's hotting up a bit in the States. We're just a couple of days away, or one day away from the first presidential election debate. So that's definitely creating some movement on the market. And there's a few other things that are kicking on. But Jerry, why don't you give us a bit of a run through of what's been happening? Bit of movement on today's equity markets for sure, Jerry.
Yeah, we had quite a good outcome from Friday's showing, and I think there's that sort of followed through to the Far East markets and here in Europe. So DAX is up, well, sharply up actually. It's putting in a pretty good performance, certainly knocking out most of those losses from last week. Even although our FTSE we're in, well, it is up, but it's just not doing anything. I think we settled.
Yeah, not much follow through this morning for sure.
Through. Yeah, we're up sort of 40 odd points, but there isn't much follow through. That's right, exactly right. Yeah, so we did rather well picking up those some of those losses at the end of last week. Nasdaq, which we have been following quite closely. We talked about the Nasdaq whale with this sizable but not overly worrying options position that SoftBank have got. That's now been replaced by, I think, just sort of more concern about the post-lockdown recovery. And also there is a bit of an increase in the infection rate. So it's accelerating, as we know, in Europe, in fact, quite alarmingly, in the likes of Spain, and even here now, although we're not on the scale of France and Spain at the moment. But I just got this feeling that things had been sort of looking a little less rosy. But look at the markets now. You'd wonder what was going on, and I think.
I just wonder if people are thinking a little bit more, the investors think a bit more about the mortality rates, because whilst infections are certainly going up, mortality rates seem to be on the decline. I was having a quick look at this morning. You can see the Google, which I'm sure is the fountain of all things that are accurate. But you've got the number of cases in the UK. It's sort of peaking around sort of 6,000 at the moment, but deaths, you look at the trend in cases is going up for sure, but the trend in deaths is pretty flat and has been for quite some time. So, does that mean that the lockdown measures that are being put in place, and certainly the ones that were put in place back in sort of March, surely it's a different situation now, really?
Well, I'd say there is. I think the infection rates were. There was a piece in either The Economist or the FT that suggested, had the testing regime been as significant as it is now back in April, the number of cases being reported in Europe would be in excess of 200,000 a day.
Yeah. So in which case, the mortality rate would have been significantly lower than one might have thought.
Correct. That's so. Is the mortality rate improved considerably? Remember, it's also a lagged effect, Adrian. So,
of course,
as the infection rates pick up, the number of hospital admissions are going up, and you would expect that to lead to an increase in the mortality rate. But it's still a long way off. You're quite right. Definitely.
I do wonder. Speaking to my wife, who's training to be a midwife, whether a lot of the pressures to introduce these changes and not really lockdown measures, but the measures we're having to take here in the UK is done really to protect the NHS, because otherwise it would be a huge burden on it. I don't know. Who knows?
Trouble is that damned if they do, damned if they don't. I just think there's a certain amount of personal, social responsibility that everyone has that. It's sometimes quite a difficult pill to swallow, but we've got to do it for the common good, haven't we? But
we do. Election though, Jerry, we're 37 days till the presidential election, so 3rd of November, hotting up a little bit.
Yeah, it is. Isn't that weird? We're all sort of thinking, 3 months, it's just not on the horizon yet. And all of a sudden, here we are on the 28th of September, and it's just around the corner, relatively. These next few days are gonna fly by. And last week we had this sort of Supreme Court appointing debacle, where Trump has enraged Democrats by appointing another conservative to the Supreme Court, which really is giving the sort of conservative-leaning Republican types on the court with a majority of 6-3. But I think Trump was sort of, I'm convinced he wanted to spin it out a little bit, but he couldn't, because the problem with it is that he needs to get the appointment made, and then the Senate has to debate and approve the appointment before the election. But I think it was replacing the headlines. There was no more sort of mention of COVID so much, but more about the debacle over the Supreme Court appointee. But it's interesting. But nevertheless, it is hotting up. You're quite right.
That's what I've been hearing. It's about trying to change the message that's going on, because he's not doing particularly well on COVID, and he's not as strong as he might have liked, perhaps on the economy, because that's perhaps easing a little bit. So yeah, he's got to try and change the message a little bit, but I just don't know if that's strong enough for him to get the march on Biden, because he's still quite a bit behind, particularly at this stage of the election. What is it, 50.3 Biden against 43.1, and what have we got tomorrow? The first of the debates, Jerry, haven't we?
Yeah, that's right. That's the this one has been run by Fox News. It'll be a late affair for us here in the UK, so early evening in the US, so it's likely to be happening at midnight and beyond. So any of you who are night owls might want to stay up and watch and listen Trump and Biden exchanging blows. But I suspect his tax return might be coming up as a topic of conversation, which was quite interesting. The New York Times expose on his tax affairs, saying that he'd paid little or no tax over the last 17 years, which actually I'm not surprised of at all. I mean, that's why he was keeping it secret in the first place, wasn't it?
Yeah, absolutely. That's definitely going to come up tomorrow. So okay, so what about and what about the markets? I mean, we've talked before about the impact on the stock market with a Biden win or a Trump win. I mean, I know you've referenced the fact that, or the likelihood that it'll be quite positive either way, because there continues to be no alternative to the stock market.
I think that sums it up, Adrian. I think the markets are set to remain pretty much on the front foot, regardless of who wins. I noticed that the FT put out an article about a poll of investment managers, and 60% out of, and this is 91 investment managers, 60% believe that Biden's going to win. And here we are, the markets. I know they've been wobbling a little bit recently, but they're not exactly hosing it. So I, as you said, there isn't an alternative. There's not going to suddenly be a great yield in US treasuries or whatever. The fact is, there isn't any other place to put your money, and the stock market remains the only place, whether Biden or Trump are in power.
I find 60% believing Biden will win remarkably low, given where the polls are at this point. I mean, maybe are they sort of talking their own book? Do they refuse to want to believe that a market positive president might lose? Because surely it's in fund managers' interest for a pretty strong stock market, isn't it?
You're right. Absolutely.
They can't bring themselves to believe that he's going to lose.
I think the probability of Biden winning is probably near 70%. The way the polls are stacking up, because what you've got to remember is that these television debates, whilst they look great on the surface, what are we? We're 37 days, as you said, to the election. Most of the undecideds have decided, everyone has decided pretty much. So there's a pretty small pool of undecideds to try and sway either way. And you're talking about real marginal gains. And I think the gap looks quite wide compared to where it was in 2016. Definitely in the swing, in the swing states, in the battleground states, as they're called, where the margins are a lot wider than Trump campaign I think would have been expecting or hoping for at this stage. So markets don't get fooled into thinking that they should be coming off if Trump's going to lose, because that's definitely not the case, and is unlikely to be happening.
Yeah. Okay. Just very quickly, do we know much about his sort of main policies of spending, Biden, if he does come in, and what that impact might have on the markets?
Well, more spending, absolutely, but he's going to be taxing more. So I think his there's been an investigation, I think Moody's have come up with a number of 3.9 trillion in his first term. Remember, that's 4 years, so it sounds like a big number, but he's going to be spending a lot on clean energy, on manufacturing and education, and to pay for it, he's going to raise corporation tax, payroll taxes, and individual taxes. So reversing some of those tax cuts that Trump put through. But I don't think that's going to be a big issue for the economy. I think it's just a redirecting of resources, really.
Yeah, well, certainly, payroll taxes are never popular, but of course, one thing I read was that the tax rises are likely to come from people earning over 400,000. I think I don't know if that's accurate, but
you'd be surprised how many there are earning that over there.
I'm sure, but the point is that won't be overly unpopular, will it? That's for sure, by the masses.
You're right. You're right.
Okay, let's have a quick look at the review then for the week that was, Jerry. So FTSE down around sort of 2.7%, and there's a general down theme last week, albeit a recovery into the close.
Yeah, into the close of the week. That's right. Tech stocks had a bit of a positive day, but they have been struggling. I was looking at Apple, $103 a share it got down to, 25% below its peak at the beginning of September. So you can see what's been happening there. It's not, as the rally was not broad-based, the correction's not been broad-based. A lot of it is the tech-heavy stocks just wobbling a little bit and doing what a lot of stocks, you've got to describe them as, overbought, and I think that's just unwinding about, really. Nothing more, nothing less.
Yeah, it looks like people took the Nasdaq whale story as an opportunity to just sort of notch some profits, and of course there's a lot of retail investors in them who would have sort of taken that again as an opportunity to think, oh my god, and panic and close out, just to reduce risk a little bit. Okay, and that was pretty much a broad fall across the board. I know we've got some sort of contra trend opportunities coming up on some of these indices at the moment, so we'll be looking very closely at those over the week ahead. What about the currencies, Jerry?
Yeah, well, risk off, as we've described this move. Risk off meaning getting out of the riskier assets such as the equities and commodities. You've seen that in the dollar, so a typical knee-jerk reaction in the FX markets with the dollar in demand. If you look at the euro, well, you've got the CAD there, but if you look at the euro, the CAD, or even the yen,
dollar Swiss. Sometimes I think it's easier to look at the dollar going up rather than euro dollar going down, because it kind of seems a bit weird for some people, I think. Well, but you can see there, dollar Swiss, big strength, and this course going the opposite way on euro dollar.
So I'm not sure it's going to be sustained though, Adrian. I think it's more of a concerted sell-up in equities that would be needed for that, and I think the Fed seem intent on keeping rates very low for years to come. So I don't see this sort of longer-term trend, weakening trend in the dollar, really changing significantly. But I don't know, if you had a sudden complete rout in equities, the dollar would rally further. But I don't think that's going to happen at this stage. And you've seen other, the dollar yen. That was another notable move. The yen actually hitting the highest point, or the dollar hitting the lowest point against the yen since the late March, when the pandemic was in its real shocking throes, as it were. So it's just interesting to see that rebound in the dollar against the yen, and I think Nikkei's outperformance reflected that. But I certainly think the new administration or the new prime minister would love to have a weaker yen, which is not what he was getting up until the beginning of last week.
Correct. Yeah. Okay. And what about the commodities? Gold took around a 5% hit, didn't it? It's a big fall, really, over the last sort of 10 days or so, really.
Yeah, I think people get confused about gold. They sort of think of it, it's in this risk-off mode. You might think that people might go for the safe haven of gold, but actually gold has been attracting that on the way up. There's a very interesting article by Mohammed El-Arian in the FT about gold becoming an investment for all sorts now. But the fact is, gold is a dollar-based commodity. With the dollar rallying, I'm afraid gold's not going to hold on to it. But look at silver. Silver's the real news, because I hadn't realized the scale of silver's outperformance this year against gold. It's done extraordinarily well, and it's referred to as sort of semi-industrial precious metal. but it's definitely outperformed big time.
hasn't it?
I think
Yeah.
I think investors have really bought into the jump in industrial demand as the post-lockdown recovery took over. But I think last week, wow, look at that fall. I mean, I just on the back of an envelope, you know, ending $27 a cent all the way back down to 23. You know, you're talking about a 14% move, Adrian.
Yeah. But look where it was, down at 12. I mean, that is a
Yeah, yeah.
significant bit of movement, isn't it?
It's just something that
Yeah.
people don't tend to talk about too much. But no, I think a touch of vertigo last week, and that's what caused it to absolutely shank. Certainly, the first 3 days of last week, it sort of traded sideways since then. But yeah, just good old-fashioned profit taking. That's what that is.
Crude down a couple of percent as well, Jerry. Although you look at this on the wider context, not necessarily big moves last week at all.
I think this is all again down to stock market wobbles, and I think that there is a question mark about future demand. And it has been following the slump in equities, then it rebounded on the back of Hurricane Sally, which tightened supplies, and then, you know, pushed back down again by slightly underwhelming storage data. And as I said, another wobble in equities sort of first half of last week, but really in a bit of a holding pattern at the moment, I'd say.
Yeah. Okay, well, I think that's pretty much it for What Do We Know. Of course, there'll be another podcast a little bit later on today where we're talking about the events for the week ahead. No doubt the presidential debate will come up there. And of course, we've got a little something called non-farm payroll happening later this week as well. So there certainly are a few events for traders to get their teeth into, which are definitely going to stimulate some movement on those Forex, stock and commodity markets. Definitely keep your pencil sharpened there. Otherwise, at Trend Signal, we do have some of our own events this week. You'd be absolutely welcome to come along, and we'll teach you one of our favorite trading strategies for identifying turning points, trends, and momentum on all of those markets as well that we've been covering off on today. It's a great strategy, really simple to identify those trades, be it the buy trades, be it the short trades, and we're going to be teaching you an exact strategy in 3 simple steps for identifying high probability turning points at our events this week. And if you want to get yourself booked in for one of those, just go to bit.ly/learnts. So bit.ly/learnts, or just go to our website, which is trend-signal.com, and you can book in for one of our free events, and we'll teach you that strategy to help you to take on these markets. But look, otherwise, that's pretty much it from myself and Jerry. Have a wonderful week's trading, and we'll see you again next time. Bye-bye for now.